Your credit score can affect what kind of financial products you can access in the UK. If you want to apply for a new loan, mortgage, or credit card, you should know how a credit score works. So, who decides your credit score, also known as your credit rating, and how is it determined? A credit score is used to show your credit worthiness. The best credit facilities are usually reserved for those with the best credit scores. In this guide, we'll break down how credit scores work in the UK. Credit score is an analysis of a person's credit worthiness. It is represented by a number, which is rated on a scale. These scales could differ, for example, 1 to 1000 or 1 to 710. Credit scores are put together by credit reference agencies. The agencies do this for several reasons, including to understand a person's history with credit, determine whether the person qualifies for a credit product, establish what kind of product the person is eligible for. Each credit reference agency calculates credit scores in its own way. Each credit lender will also have individual criteria to assess applications. However, your credit score is a standard indicator that lenders look at during the approval process. These scores determine how much risk is associated with you as a borrower and what your borrowing habits might look like. It's important to understand that you don't have a single credit score that all companies access and use. Instead, different credit rating agencies look at your data to determine their own measure of your credit worthiness. Each organisation follows the same general lines to determine this, but different credit rating agencies may take a slightly different perspective. That being said, there are a couple of essential pieces of information that are almost always used to determine your rating. A credit score is made up of data held by credit reference agencies. This information covers 4 main areas. 1. Income information. The first thing credit reference agencies look at is the personal information you used when applying for credit. This includes information about your income and employment. These factors can influence your credit worthiness. Individuals with lower income levels or an unstable employment status could be seen as a greater risk to lenders. When applying for credit with any lender, always make sure you enter these details accurately, as this information is used to determine your credit suitability. 2. Payment history. Your payment history has a significant impact on your credit score in the UK. This history shows lenders how you've been able to handle credit in the past. This helps them determine how likely you are to be able to make payments in the future. The most important thing to remember is to ensure that all your bill payments are made on time and in full. This shows stability and that you can borrow and repay money. If you've successfully repaid lenders in the past, this is a good sign for your credit score. If you have a history of late or missed payments, then this will surely damage your credit score. Your payment history with nearly all lenders is held by credit reference agencies and can be seen by other lenders. This means that even if you are applying for credit at a new bank, then they can still check your history with other creditors. 3. Credit utilization. Credit agencies check your credit limit on any credit agreements that you currently have and look at how much of them you have utilized. If you've maxed out your credit limit, this tells credit agencies that you are reliant on debt, which is not a good sign. Keeping your credit utilization low shows credit authorities that you are able to borrow responsibly and stay in control of your debt. 4. Credit mix. Your credit mix refers to the different types of accounts that your credit report is made up of. This could include any type of money borrowed, such as credit cards, student loans, mortgages, car loans, and more. Your entire credit mix is considered when determining your credit score. Having a variety of different credit accounts shows lenders that you are able to manage multiple credit obligations. It's important to maintain a stable payment record across your credit mix. A healthy mix of credit can keep your credit score looking good as long as you're able to keep up with all of your payments. Credit reference agencies. In the UK, there are 3 major credit reference agencies. These agencies keep all the information on your past credit behaviour. If you ever make a credit application, at least one of these agencies will be involved in sharing data about you. These 3 agencies are Equifax, Experian, and TransUnion. The data kept on your file generally only goes back 6 years. Unless there was a significant event, like bankruptcy, your credit history before this point will often not be considered. Understanding the fundamentals of how credit score works in the UK will help you develop better financial habits when applying for a loan. Pay attention to the different factors that influence your credit score and maintain them responsibly to help you get a good credit rating for potential applications.